What is up, and welcome back to the We Are Investing channel, a channel that is dedicated in investing and personal finance. On this video, we're going to be talking about the top 3 stocks to buy right now. Now, this is in my personal opinion. I am not a professional advisor and I'm not telling you what to do in the stock market, but I am giving you information on what I am doing right now. So with that being said, before we proceed any further, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. And also, on top of that, please be aware that there is a Patreon page for the We Are Investing channel. When you join the Patreon, you get access to a Discord server of around 200 members, and you also get to follow all the trades and investments that we make in real time via Patreon posts. Whenever we open up a new position or close a position, I notify all Patreon members. And we have had great picks over the last month and especially over the last week. Check this out. This week we made $15,327.25. And over the last month, the stock market has been crazy this month. It's been an absolute great month for the We Are Investing portfolio. Over the last month, we are up $46,963.41. So if you want access to the Patreon page and get to see what stocks we are picking when we pick them, you have to join the Patreon, and a link is provided down below. Oh, and I almost forgot, it is the weekend. So raise your glass and let's enjoy the weekend. Alright, the first stock that I want to talk about on today's video is Leslie's, ticker symbol LESL on the NASDAQ. The current share price is $23 a share, and over the last month, the stock is only up 6.98%. Now, Leslie's is a company that sells pools and pool supplies to consumers. And why I am bullish on this stock moving forward over the next 12 months is because I think pool sales are going to be at all-time highs yet again for the second straight summer. Because of last summer, with everyone being locked in the house, so many people wanted to order pools. Not everyone was able to get their pool delivered because demand was so high, supply could not keep up with the demand. So those people last summer that weren't able to complete the order and get a pool are going to be shopping for pools this summer. And I also think we're going to have additional people wanting pools at their home because people are spending more time at home, and I think it's going to be worthwhile. And I still do not think a lot of people are going to be taking vacations even this summer. Even if things reopen back 100%, there's still going to be people that say, I'd rather put that money in my home because I'm working full-time from home right now, and I'm going to be doing that in the future as well. So I think pool sales are going to be at all-time highs yet again. Now, the other thing with Leslie's that you have to keep in mind is, they sell pools, and that's a one-and-done transaction. But each pool needs chemicals, needs supplies. And Leslie's has a great rewards program that keeps customers coming back to their store so that they get those supplies and chemicals from Leslie's. So you sell one pool to one customer, and then you get multiple transactions from that one customer yearly every time they open up their pool, every time they need to maintain their pool, every time they need a new floaty, whatever the case may be. They probably will shop at Leslie's because they bought their pool there and they have a great rewards program. Now, we've been saying this, and this is not the first time I include Leslie's in a video, but now analysts are starting to say what I've been saying about this stock for quite some time now. Just on December 16th, an analyst came out and said Leslie's rallies after Jefferies points to strong loyalty program benefits. And the Jefferies analyst is saying that Leslie's loyalty program has boosted market share gains since its launch in 2014. And we believe that this could lift comps beyond street expectations in 2021. I agree, and that is what I've been saying about this stock for quite some time now. Now, something else to note about the stock is that they are going to be reporting their earnings on December 21st. Now, typically I do not like to open a position right before earnings because there is a lot of risk embedded with that. So with that being said, it might be better off to wait until after earnings. Now this might be a slow earnings for Leslie's just because of the time of the year. People are not buying pools in the Northeast or any climate that is cool during the winter months. So there might be a slow quarter and maybe there is a dip in the stock. If there is a dip, then that is a buying opportunity for this stock. So definitely keep your eye on it. They are reporting earnings relatively soon, so keep your eye on the stock and see how it performs post earnings. All right, the second stock that we want to talk about on today's video is Linde, ticker symbol LIN on the New York Stock Exchange. The stock is currently trading at $257.67 a share. And it really hasn't moved that much. Over the last year, the stock is up 22.90%. And over the last 5 days, the stock is up 3.22%. Now, the reason why I have this stock on my radar, and I know a little bit about this company because I used to work for them as an internship when I was still in engineering school. Now, this company, I think, has two potential avenues for future growth that could really lift the share price up. The first is happening right now, and the second is more of a long-term project. The catalyst that is happening right now are the vaccines, especially the Pfizer one. Now, Pfizer vaccine requires very low temperatures. They require temperatures at minus 94 degrees. And in order to achieve those temperatures, what is needed? Dry ice. Dry ice is going to be in huge demand while we have these vaccines. And those that supply dry ice, or the things that are needed to create dry ice, are going to benefit greatly from this vaccine. And Linde is one of those companies that can benefit from this. And check this out. The industrial and chemical companies involved in the production of CO2 and dry ice are not your most high-profile names. Germany's Linde acquired US-based Praxair in 2018 for more than $80 billion. Linde, along with Air Products, supply CO2, which is then converted into dry ice by their customers. So if Pfizer is planning to produce a ton of their own dry ice, Linde can still provide the CO2 that is needed in order to convert that gas into dry ice. Another potential avenue for growth for Linde is they are working with Daimler Truck to collaborate to develop hydrogen refueling technology. Linde and Daimler Truck AG agreed to jointly develop the next generation of hydrogen refueling technology for fuel cell powered heavy-duty vehicles based on subcooled liquid hydrogen, which allows for a higher onboard capacity, greater range, faster refueling, and superior energy efficiency. This new fueling process is going to be implemented in the series version of the Mercedes-Benz Gen H2 truck, which was unveiled in September 2020 as a concept vehicle and will have a range of over 1,000 kilometers. Now, like I said, I am not expecting a ginormous return here. However, I think it's a low risk because the core business still is very strong for this company. Now, it is good to see that analysts have a decent upside potential for Linde. If you look at the analyst projections, you have high of 355, average of 289, which corresponds to a 12.21% upside for this stock. 10 to 12% for a low risk trade is well worth it in my opinion, and I like the risk to reward ratios for this stock. Alright, so the last stock that we're going to mention on today's video is Splunk, ticker symbol SPLK on the NASDAQ. The current share price is $165.89, and it had a pretty strong week. It was up 7.18%, and this is following a month where the stock really dropped. In the last month, the stock is down 16.26%, even after the strong week it had last week. Now, the reason why I like this stock is because of the risk to reward ratio and the potential return you can get for this stock. Now, if this stock was to go back to its prior levels, that would correspond to a 24% return on your investment. Now, we did a video on this stock before, and it was consolidating, and I said, let's just wait until it's no longer consolidating, wait for confirmation before entering into that stock. And I think that we received confirmation last week after it broke through the resistance at the upper trend of that consolidation, and it kept on moving higher. Now, the analysts are showing a nice upside for this stock. The high range, $275, that would be a great return on your investment. The average, $208.46, which would also be an awesome return at 25.66% upside from the current share price. Something else that you want to know with this stock is that Cathie Wood and ARK Invest in early December, I think it was December 3rd and December 4th, bought $55 million worth of this stock after it dropped. Now, something else with this stock is an analyst came out upgrading SPLK. He is stating that the company has plenty of capacity to expand its revenue just from its existing installed base, as only 8% of customers use its platform across multiple centers. There are signs of progress of growing revenue per customer base on a 43% year-over-year growth in customers that spend at least $1 million a year to 444 in the third quarter. Splunk should be able to show its investors 38% ARR growth in fiscal year 2020, 34% in the following year, and at least 30% in the year after that. Coupled with a valuation of 12.1 times enterprise value over sales at the low end of rival enterprise vendors, this stock is looking attractive at current levels. Now, I agree with that viewpoint, and I think that there is upside with SPLK. I think the drop following their earnings was just too much, and we are going to see this stock rebound, in my personal opinion. And if that does happen, you are going to make a lot of money on your investment because you're going to have a decent return just to get back to those prior levels. And according to that analyst and analyst price targets, we can actually surpass those prior levels and continue moving higher altogether. So with all that being said, guys, those are my top 3 stocks to buy right now. I hope that I was able to provide you guys with some good value. If I was, please consider returning the favor by hitting that subscribe button, ringing that bell, and smashing that like button. And also, please consider the Patreon page where we post all our investments in real time. And you also get access to a Discord server of around 200 members. Links are provided down below. And also provided within the video description is a Facebook group, which is completely free, and a Webull promotional link, which is also completely free. They would actually pay you to join Webull. If you use that link, you get access to 2 free stocks worth up to $1,600. And if you refer Webull to 2 friends, you will get an additional 10 free stocks on top of that, valued anywhere from $6 to $1,600 per stock. But outside of all that, guys, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!